Good morning, everyone. Welcome to the Modern Market. This is our daily show from Monday to Friday at 7 a.m. Eastern Time, 12 p.m. BST. Every day of the week, we discuss all things to do with the modern market. That is the crypto market, the NFT market, and how to make some or a lot of money on the internet. I'm your host, B-Check. I'm joined by my legendary co-hosts, Legendary and Sammy. And we're going to get into everything to do with the crypto and NFT market today. But before we do that, just a reminder, friends, that nothing that we say here is financial advice. This modern market is exceptionally risky. We do not know anything for certain. So please do proceed with caution and exercise your own judgment. With that out of the way, Legendary, it is Thursday. It is the 6th of June. How are you doing? How are you feeling?
GM, doing quite well. The gold stash is growing on Blast. Added 600-ish gold from the post that I did about Blaze on, and looking forward to more gold. Looking forward to the Cambridge distribution, which should happen in the next couple of days. It's going to be a big W for Sammy, who will certainly outperform me on that one.
Yep, still stacking the gold, as you know. About 20 more days left for the Blast gold allocation. Try to stack as much as you can, then we'll get to TGE. Everyone's pretty excited about that. Sammy, how are you doing, my friend? What is up your side?
I just love how Legendary's mood is dictated by the gold again. Just a big smile on his face.
Yep.
But yeah, no, it's good. 3 weeks to go, locking in, and yeah, doubling down, trying to find those final few farms just to squeeze a few K extra gold out coming into TGE, because I think it will be a cook.
Yeah, definitely bullish on that. Right, let's get into it. Let's just get in straight to the headlines as always. Remember, we're live on X, we're live on YouTube. You can also find us on Spotify and Apple Podcasts should you wish to catch us up at a later time. Let's get into it, starting with the price action. We have Bitcoin at 71K, pretty flat. ETH at 3.8K, Solana at $172. In terms of the headlines today, we've got Canada cutting rates from 5% to 4.75% yesterday. The European Central Bank is expected to follow today. The Bank of Canada's decision follows rate cuts from central banks in Latin America countries such as Mexico, Brazil, and Chile this year, but it is the first member in the G7 to make the move. Traders expect other member countries, except Japan, to loosen monetary policy in the coming months. The European Central Bank, which governs monetary policy in France, Italy, and Germany, is widely expected to make its first cut of the cycle this week. The Bank of England is forecast to do the same this month. That was from the Financial Times this morning. We'll discuss some of the implications of that in just a little bit. Number 2, VanEck announces the ETH base case price target of 22K, a bull target of 154K, and a bear target of $360. VanEck obviously being a very traditional institutional investment manager. And yeah, we're going to dive into its report and some of the details in there. And finally, $2 billion FTV gaming token Prime begins staking today. It's staking for a different AI token called Prompt. It's gone live. 60 million has been staked already. I want to discuss this kind of staking mechanism at the moment, because a lot of tokens are going to ask you to do it. And we just wanted to do a little evaluation on whether that's a good thing, bad thing, or no comment. Let's get into some other price action. We've got CryptoPunks at 30.5 ETH, up 1%, but Bored Apes at 12.5, Mutants at 2.1, DGods at 1.1, down 4%, flirting with 1 ETH there for the DGods. Captains at 3.6 ETH, Azuki's at 4, Penguins at 10.3, Mad Lads at 62 Solana, and the Nouns winning bid was at 5 ETH. Legendary, that is the price action. Those are the headlines. Is there anything catching your attention before we get into a bigger discussion on the headlines today?
Yeah, absolutely. If we take a look at the Mintify heat map on the ETH side of things, there's 2 things that I briefly want to comment on. First one is just an extension of the conversation we had yesterday and the show before. Pirate Nation, pirates are still pumping up another almost 10% and have crossed the 1 ETH floor price, are sitting at a 1.05 ETH floor. I think we spoke a lot about the token to come, the success of the team. So nothing really to add to that. The second thing that I want to touch on is something that we haven't talked about in the show for quite some time, which is art. Cool to see an art collection trending again. You had it in the loans. It's also trending price-wise. It's Rafik Anadol's Winds of Yawanawa. being up 9% on the day and very close to a 4 ETH floor.
Do you know what? Even if that wasn't trending, I appreciate it's interesting that it is trending up 10% and almost a 4 ETH floor. Even if it wasn't, that's a really expensive piece. That's a really expensive collection. Like, I guess it's stabilized in this 3 to 4 ETH region. I know at the highs, it might have ripped up to around 8 or 9 ETH, I think, at one point. So yes, it's down from then, but there is serious demand for Rafik Anadol. And this is clearly a very, very favored piece from the market. I'm sharing it on the screen for the people who are watching it on YouTube and on X. Really beautiful collection, to be honest. Legendary. Did you want to say something else there?
No, just happy to see art again.
Cool. I thought you wanted to come in there. Sammy, what about you? What is catching your attention?
Yeah, there's one thing on the ETH side and one thing on the Blast side that I want to touch on. I think if we start on the ETH side, we see Overworld Incarna's up 5%. And if you recall yesterday, we saw a bit of a sell-off.
Sure.
And we were trying to work out reasons why. But subsequent
down like
to that,
25% yesterday, wasn't it?
Yeah, exactly. It's back up 5 or 6% today. I think there was news around the free arena went live. So it's effectively like a game that they've just rolled out. So
Sure.
A battle arena. So that's the key driver for that price action. It's just interesting with the timing of it. So it's obviously fallen off. So people obviously weren't aware of that coming, or if they were, they weren't that bullish on it. Or it's kind of fallen off for whatever thesis that we tried to work out yesterday, and then it's kind of come back up today. So that's on the ETH side. On the Blast side, we had the Blast Pepes. So the first 404 collection that went live. It's an interesting one because it's a 404 collection. I don't know if it's on the NFT specific heat map, but I've just posted the link in our little channel for our little private chat for the actual DEX tools link. So you'll see up there, it's up to about 50 cents. Now each mint cost 0.069 ETH yesterday. And so that'll be around about the $250, $260 mark. It's now trading at about 500. So you're up a 2x, it pumps maybe a little bit higher. So yeah, pretty decent cook. And I think it's pretty innovative. There's a lot of speculation that because it's a new token, people are putting the fungible side of the 404 in the jackpot and hoping for that to hit because it's new, innovative, and a token seem to hit recently. So it's one to watch over the next 24 hours or week or so, see if it does hit the jackpot.
Yes. An interesting point about this one, which I was kind of asking the team, they actually came on to the show with Thread Guy the other day. And one of the questions I asked was like, what we've noticed on Blast, because of the native yield, you get this opportunity as a creator to ask for people to give you money. And then it basically, you can earn off the yield and just tell them it's refundable, which is an interesting concept. It hasn't really been done before, but that's something that Blast enabled. Now, but what that did to price action basically meant that all price action was stunted because everyone always knew, well, we're not really taking a risk by minting this thing. So we're not going to go too far above the mint price because we want to know that, well, because that it kind of set a ceiling. It was both a floor price and a ceiling price at the same time. That's what I kind of observed from the way the market treated it. In this case, this is also a refundable mint, but not in the same way, because in this case, they took all of the mint funds at the beginning and they created this floor lock, or that's what they were called. That's what they called it. And they kind of said, well, whatever you put in, you'll always be able to get back out from the liquidity pool after. So in some respect, it is, again, like you'll at least get your minimum back out. But it seems to be the case that people are speculating on it. And so it has, in fact, gone higher, at least for now. Sammy, do you think that's something to do with this hybrid nature? The fact it's a 404, it's got the NFT element and it's the token at the same time. Why is this different to the Blaster mints, which are refundable, when this is ultimately refundable too, but it's clearly people are willing to speculate on it a bit more?
Well, I think it's asymmetric risk. You've got a deep liquidity pool. So you've effectively, like you mentioned, the redemption is 0.069. So buying at that price is like, it's almost a no-brainer, because if it does go up in price, you're going to make money. Sure. And I think because it's new and because you have the possibility of a jackpot, like what valuation do you put on that expected value for hitting that jackpot? So I think there is that upside that you kind of factor in. If anyone's kind of trying to work out from a model perspective, you'd be like, okay, well, the baseline is 0.069. What value do you attribute to that jackpot? And what value do you attribute to, because they're partnered with Wasabi, like you'll get benefits for it being staked in Wasabi. Like, how do you price all these individual variables? And if you add that all together, you can probably work out, okay, well, I think the premium to what the 0.069 ETH is, it could be like, I don't know, double, which is pretty much what the market said. So it's an interesting venture, and it's kind of like, well, what does the market price those individual variables at? And I think it's probably priced in to an extent now, but there could be more upside as more information is released about the collection.
Okay, so that's interesting. So I guess that was the key question. It's like, what does the delta between the floor price and this price represent? So in your opinion, I want to hear legendaries in a second. In your opinion, it represents the jackpot potential. But to be fair, all the NFTs have potential jackpot potential, but maybe what it is in this case is the Wasabi name and brand, given that they're such a favorite, and maybe that has like some additional jackpot potential, as well as you being able to stake it in Wasabi, maybe earn some of their points at the same time. Legendary, do you have a thought on that? Why are people more willing to kind of go in on this? Is that the long and short of it? Is it because it's a Pepe and so people want to get the frog as well? What's your thinking?
Very much agree with Sammy here. I think what I would add is with Blaster, you have multiple refundable collections and just a smaller pool of gold that the protocol has received. And I think that the Blaster collections would be treated different. So it's one of the Blaster collections winning versus here you have one collection, everybody has that, and it's not split across 10 different collections that people would add to the jackpot decks. So you just will have a higher chance to win that. Wasabi has gotten definitely a higher gold allocation as well. Although compared to some of the other DeFi protocols and compared to how they're actually using, that's a point that Stats is always making too, how they're actually making use of the features, the Blast native features. They didn't receive that much gold in comparison. So maybe there's also like the additional speculation that they can make up a bit of that with a higher jackpot allocation that might come their way.
Interesting. Okay. Well, definitely one shout out to the Wasabi team. People, I think, definitely thought on Blast, like you can't sell out a 10K collection. You definitely can't do it at that price, but they did, and it's gone up in price. So there is demand for more types of stuff. Admittedly, it's very, very speculative, and maybe it has this additional angle where people are holding for other potential benefits. But frankly, so is all of NFTs, right? Everyone's always got like an ulterior angle, or at least a proportion of people will always have that ulterior angle. So they sold out a 10K collection at a healthy mint price as well. So shout out to them. Well done for getting that done. Look, we're going to get into all of the headlines in just a little bit. Wanted to kind of take the conversation in a different direction. We always say at the top of the show that we talk about crypto NFTs and how to make money online. I saw this post earlier today and it got me thinking that I have seen it before. It's on Money and Luck by Naval. And I thought I'd share it because I found it interesting. I've thought it helpful to me before. I wanted to share it because I thought it might be helpful to other people too. Then just wanted to see what your guys' thoughts are, and maybe even place yourselves on this spectrum of luckiness. Like, what type of luck do you think you attract yourself? So again, I'm sharing this for the people on screen if you want to read and kind of watch it at the same time. But this is what Naval, who's like a very famous investor, an entrepreneur, said on Money and Luck. He said the following: a lot of people think making money is about luck. It's not. It's about becoming the kind of person that makes money. In 1,000 parallel universes, you want to be wealthy in 999 of them. You don't want to be wealthy in the 50 of them where you got lucky. We want to factor luck out of it. There's 4 kinds of luck that we're talking about. Number 1, blind luck. The first kind of luck you might say is blind luck, where I just got lucky because something completely out of my control happened. That is fortune and that's fate. Number 2, luck from hustling. Then there's luck that comes through persistence, hard work, hustle, motion, which is when you're running around, creating lots of opportunities, you're generating a lot of energy, you're doing a lot of things, lots of things will get stirred up in the dust. Number 3 is luck from preparation. A third is that you become very good at spotting luck. If you're very skilled in a field, you will notice when a lucky break happens in that field, when other people who aren't attuned to it won't notice. So you become sensitive to luck, and that's through skill and knowledge and work. And number 4, luck from your unique character. The last kind of luck is the weirdest, hardest kind, which is where you build a unique character, a unique brand, a unique mindset where luck finds you. You created your own luck. You put yourself in a position to be able to capitalize on that luck or to attract that luck when nobody else has created that opportunity for themselves. Legendary, I want to come to you first on this. First, what do you think about this kind of framework of there being like a spectrum of luckiness, and where do you place yourself on it?
I like that spectrum a lot, because a lot of people also tend to overestimate their own contribution to their success and just underestimate the amount of luck that they had. Very much love Malcolm Gladwell's books on that, who kind of show why people like Bill Gates, of course, put in a shit ton of work, but also had like lucky circumstances that put them in a unique position at a unique moment in time. I think with Bill Gates, the story was that he basically ended up being at one of the only universities that had computers at the time that he could use in that specific library that catered his interest. And nowhere else in the world would he have had that opportunity at that like forming moment in time at a young age. So there's definitely blind luck that's out of your control, that I have definitely had. And in terms of the other 3 categories, I like 2 and 3, luck from hustling, luck from preparation. I think when I had that post, for example, yesterday on Insert, oh, you got lucky that you didn't lose all your money on the spinning. I was
Who
like,
said that? Did anyone say that to you?
Yeah, this was calculated math, and I tried to explain to them why it's an EV positive gamble. And if you do the math,
just explain people what you did on Insects. I guess people will, because you've been doing a lot of like plus EV gambling on Blast across different protocols. So just explain what you thought about and then how people responded to you and why they're wrong.
Yeah, the gist of it was that they have gotten way less attention. Again, on Insert, you spin to win prizes. You can select the prices, you can see the odds. And sometimes with ETH pumping, with floor prices moving, you ended up in situations where Remelius, for example, moved up to 1.75 ETH, put in a 0.01 ETH spin, have a 1 in 150 chance to win. So basically you have a 15-ish% upside on that gamble. You can increase the amount of money that you spin with to decrease the variance. And if you just put enough capital to that, you will return to mean and you will capture 15% upside. And because no one else is farming that protocol, we'll also walk away not only with more ETH, but with a shit ton of gold, which happened in my case. And again, that's not luck. That's just like doing the math and being prepared in that area.
So that sounds a lot to me like this luck from preparation side.
Exactly.
Where it's like, if you are very skilled in a field, you will notice when a lucky break happens in that field. So you notice this gap that other people were not attuned to, and they did not notice it, but you did.
And obviously, after I did that, and I did the same thing with PlayStation 5s, where they didn't adjust the ETH redemption price for the fact that ETH had pumped that much, and won the 32 PlayStation 5s on a very similar EV neutral gamble in that case, they had to adjust the odds and make them worse, because otherwise I would basically drain the entire gold and keep on going. So you could only do that like in a very specific time frame. Someone else was even smarter than that and figured out that pudgies were bugged yesterday. And if you just pudgies have I think a 1 in 1,400 chance to hit with a 0.01 spin. So if you do with a 1 ETH spin, you would have a 1 in 14 chance to hit. Highly negative because they're not a 14 ETH floor. However, with pudgies, if you did a 1 ETH spin, you actually had a 100% chance to hit them. And that person put in 5 ETH, saw that mistake and walked away with 5 ETH. And they were apparently testing all the collections to see, because you can test and spin without real money. So that, again, someone might say, oh, that person got lucky, but someone was like out there and trying to test edge cases in the protocol and find something they could use to their advantage. And a lot of the things, and that's my final point out, a lot of the things that we see in crypto happening, and Cyrus is extremely, extremely good at that, is finding those arbitrage opportunities where people think he got lucky, but he just prepared himself in a way that he doesn't take any directional risk with the trades that he does, and captures on the arbitrage opportunity that he discovers, and puts, quite frankly, a shit ton of effort and time into finding those.
And this is the thing, right? People don't see all the time and effort that it takes to do the calculations, do the arithmetic, do the preparation. They don't see that. They just see the spins or the execution of something, and then they think that that was all that happened as part of the process. So I would definitely stick you very much. I mean, not that you've probably got elements of all of this, but this is where you're excelling the most, I would say, at least at the moment as well. Sammy, what do you think? How do you think about the different types of luck? Is there one which speaks to you most at the moment as it relates to like making money and getting lucky?
I think there's elements of all of these, and I really like this framework because it pulls out different parts of, I guess, characters that are very successful in the crypto space. Like you'd have a lot of people are very much problem solvers, and they have high work ethic, and they do effectively try and find unique opportunities. So I think the luck from unique character, there's like, I wouldn't personally find the things that Legendary has found with Insert or YOLO, because that specifically doesn't appeal to me. But however, from the gaming side, like Cambria as an example, like I would go deeper there to find those nuanced ways of getting ahead within that particular game. And I think that comes from that unique personality or characteristic that kind of appeals to you. And everyone has this to a certain degree. They just have to work out what that specific thing is. And once they find that out, they can then go harder on that specific area because they enjoy it more, or they'll go deeper than the next person to then have that advantage. So that's how I see the fourth one. And I think that only necessarily comes when you have the first two, or like the number 2 and number 3. So luck from hustling, if you don't put in the work ethic, you're not going to be around to find those unique opportunities. And I think the luck from preparation comes down to building those systems to try and find those opportunities quickly before someone else does. So I think they're all kind of together. And the top one, to be honest, is just literally randomness. So there will be things that you just stumble across that you effectively you notice before someone else, and that could be down to luck, but you find that first. So I think the top one is harder to hit multiple times, but the bottom 3, if you nail all those 3 regularly, you're going to do well.
Yeah, there's an element of it just being interlinked, isn't it? Like you can't really prepare properly if you haven't hustled enough to know in what direction to prepare and analyze. And then if you haven't hustled and prepared sufficiently, people don't really know about your wins or know about your successes enough for you to create your own unique opportunities. So it's only now, if you think about it, even for us as a show or for us as content creators, where you start to get people kind of reaching out to want to work with you in certain capacities. But that's been like, as we've said, like a good more than a year of like absolute like daily grind and daily hustle. And yes, there were a few people towards the beginning, but it's definitely become more numerous the more you become known for your specific thing.
And I think just to that, I think about that hustling over a prolonged period of time, there's the phrase that it takes 10,000 hours to become a master in a specific subject. I think it comes down to muscle memory as well, because if you're in a specific area or market for long enough, you'll identify these patterns a lot more quickly, or you'll be able to connect themes and when trends are changing. So I think that comes down to actually experience as well. Like if you come fresh to a market, you can't expect to perform the same as someone who's been around for 5 years, just because they do kind of notice those signals and signs a lot more efficiently and effectively.
I think it's almost a progression. Like, at least if I look at that, I came into the space by blind luck, definitely not preparation, that I bought ETH the first time at $11 and then kind of found NFTs in 2019 because of gaming, et cetera, then hustle throughout COVID. Then you identify some of your skill sets, you move into that preparation category. And then ultimately, as Sammy said, like he has the love for RuneScape and the love for specific kind of games, and is finding a lot of upside and alpha there. I am certainly one, just because of the bets that I used to take and I still like to take. When I see a new gambling platform like IKB, etc., I try to find a way to profit from that, to find an arbitrage or EV plus opportunity, and then you move into that like fourth set. So I feel like it's almost a natural progression with it.
Yeah, I think that definitely makes sense, and it becomes, I don't know, Legendary, you mentioned at the start, you said that sometimes people are not aware of how much luck that they have as part of the process of kind of becoming successful. I actually think sometimes now people aren't necessarily aware of how much agency they have of creating their own. Like if you do keep at it long enough and keep doing the stuff that you're meant to do for a long enough period, and kind of start to collaborate with the right people too. So interesting stuff. Definitely wanted to bring that up because obviously we speak about crypto and the market and all those types of things, but we're also here to try to be as successful as we can on the internet too. And I think thinking about that framework helped me. So I hope that conversation has been helpful to you too. We're going to get into the headlines now, though. We've got 3 headlines to discuss today. As we mentioned at the top, we've got Canada cutting rates, and maybe the expectation that the European Central Bank will cut rates today further, as well as other people pretty soon. What are the implications of that? We've got the VanEck crazy, well, maybe not so crazy, but very high bull ETH targets. We're going to dive into that report in just a little bit. And then we've got the gaming token stuff to do with Prime, where they've kind of asked a lot of people to stake up to a pretty long time, 3-year time frame. I want to discuss that in a little bit too. So let's start with the rate cuts, Legendary. I think we'll start there. I'll just set it up quickly. I'm sharing this article on screen as well for people who are watching in. Remember, we're live on X and live on YouTube at the same time. So this was the news that Canada's central bank has cut its main interest rate, making it the first G7 nation to loosen monetary policy in the current cycle. It's reduced from 5% to 4.75%. And traders on Tuesday placed the probability of a June rate cut at 84%. The Government Council has decided monetary policy no longer needs to be as restrictive. This is what their governor said. And we've come a long way in the fight against inflation. Our confidence that inflation will continue to move closer to the 2% target has increased over recent months. Maybe the additional important point, which I included in the snapshot, was that this is on the back of many Latin American countries also cutting rates, Mexico, Brazil, Chile this year, but it's the first G7 country to do so. And the expectation is basically everyone else in Europe will do the same. Maybe apart from the G7 countries, maybe apart from Japan, maybe the only one who will not. The Bank of England is also forecast to do the same this month. Obviously, US cuts are expected at some point in time soon. Legendary, what do you think about this kind of global move to cut rates at the moment, and what are the implications for crypto and everything that we do on this side of things?
I think it's quite remarkable. We have expected a lot more rate cuts in the US that did not happen yet. The European Central Bank hasn't done a rate cut since 2019. Again, they're expected to do it today by 25 basis points, so 0.25%. And despite that basically dynamic around interest rates, the stock market has been doing tremendously well, reaching all-time highs in multiple sectors. Crypto is doing tremendously well, despite not having had rate cuts. So that is something that makes me, just focused on the crypto bubble, particularly bullish, because all of those things in the last bull run would be faced with a lot of skepticism, would be faced with, oh yeah, we can't pump, rates are too high, macro's looking terrible. And I remember how much commentary there was on the timeline whenever there was a meeting, whenever there was the potential rate cut or rate hike. And that seems to have completely moved into the background, and no one really talks about that as prominently as we used to do just a year ago.
Yeah, I think those are fair points. Funky, your hand is raised. Welcome to the stage, my friend. What are your thoughts on the cuts? Obviously, lots of cuts kind of happening outside of the US for the moment. You are our official US correspondent. Is the US going to follow? What are your thoughts, sir?
GM, everybody. This is a really interesting development, I think, because when you look at the beginning of the year, there was an expectation for something like 4 cuts or whatever it was. And then the market started to price that differently as we saw inflation becoming sticky. And then it became, we're going to get maybe 1 cut in September if we're lucky. So this is, I think, interesting, because if now we're getting these bigger G7 countries starting to cut, is the pressure going to be on? Is it going to be a game of chicken with Powell and the Fed? Are they going to just talk about, oh, inflation's still sticky, or are we going to actually get, because one of the first rate cuts was, I think, projected to be July originally. So it's interesting that these bigger countries are now starting to get these cuts. And I'm wondering if that's going to put any kind of pressure on the Fed, and then, just the election coming and everything else to sort of ease the monetary policy. But it's already been happening, right? Like, we know that there's all these back, the way that they've been doing the money flow to banks and everything else. If you've Arthur Hayes, which you quoted in the snapshot, about being in a club this summer, he's done some great essays overall about just how all this works and how we've really already had a lot of cash flowing into the system. I can't remember the initialism that he uses, but it's something about how the banks can access money through the treasury. So yeah, it'd be an incredible game on if we get a rate cut in July.
Yeah, I that does seem to be how people are thinking about it. You quoted, or you mentioned Arthur Hayes again. The quote was actually this. He said, "The Bank of Maple Syrup, aka Canada, cut yesterday. ECB on deck today. Market expects a cut this summer. A lot more interesting than I expected. See you at the club." Sammy, how do you respond to that? Are we going to the club this summer?
I just don't know how we're not going to the club this summer. We'll be in pre-Richmond clubs. No, I think it's an interesting one because, when we saw those rate hikes a little while back, we saw probably a bit of a correction on the equity side. We saw 20-30% pullback, and now it's back at all-time highs. So I just don't know whether these economic levers are working like they used to. And if you've got asset prices at all-time highs for crypto stocks, but also interest rates at pretty high levels too, like if you cut them, I just don't know how this isn't going to go north. So yeah, it's an interesting one. But then again, the psychology of markets, like if everyone's expecting that, maybe it could do the opposite. And yeah, it's just very hard to predict. But I think long term, or at least medium term, like crypto is probably going to be going up.
I think when you said the stuff about the traditional levers maybe not necessarily working, or the fact when you look at the data and where all these things are placed, yes, equities are at all-time highs. Inflation has been very high. And something just seems off, right? It's like, well, what if we were to do this now when all of this stuff is already really high? Does that mean, is it just going to send everything completely through the sky? One point that I've been thinking, and I know people keep saying that inflation is fine now, or that it's like got under control, but I'm just not certain that what is kind of communicated in terms of even data and the media is how people are actually feeling out there. And I think there's a little bit of a mismatch between what people are saying, like, because the only way that they're able to cut the rates is if they're going to be able to say that the inflation's kind of getting under control, right? And I think it just feels like there's a mismatch at the moment. Did someone want to come in
there? So I think I'm a big coffee drinker, and they took out the coffee from, I think it was CPI or something like that, because it had gone up too much. And I was like, well, if you're not comparing apples with apples, then actually the inflation rate probably is higher than what is being reported. And I do think that, we live in a growth society. Everyone wants to grow their bags, even though inflation might be higher. So inflation targets are typically 2%. That's what they try and get back to. And if they're achieving that, tweaking some of the what goes into that basket as well, maybe at the same time, then they probably get to an acceptable level, at least in the short term, whilst they try and work out a medium to longer term solution to it. Because at the moment, it does feel like it's just band-aids. And I don't know how, and I don't know, maybe the structural changes about bringing in, like we spoke as a couple of days ago around Bitcoin becoming that dual reserve currency for nations. Like we could be seeing like that transition of like the traditional monetary system to something else. And that's probably something that I'm more interested in, and seeing whether you have this acceptance of something that's supposed to be, well, like with ETH, programmable money, but also Bitcoin that's like literally digital gold. And that to me is pretty interesting. And I wonder whether the economic system that we see today is going to be dramatically different sort of 20 years from now.
Yeah, it's a fair question. The coffee thing is interesting. It's a good example to bring out because, as you say, if you continue to tweak the metrics by which you measure things, then we can't measure the current rate versus the rate 5 months ago, because it's a different basket of goods now. And so I don't think we can say with certainty that they're doing those things. We haven't looked at the data, but it does feel like, when people tell you that inflation's under control, it's just not. Or that's the suspicion I get from having conversations with people who are, less well off. That's my instinct. Funky, your hand is raised here. Maybe we want to put a bow on this topic. Maybe hear from Legendary one more time, and then we'll move on to the next one.
Yeah, just real quick. I mean, we have here in Tampa, Florida, the dubious distinction of being the most inflationary, like, metropolitan area in the United States or something like that. That was, at least in the last few months.
Okay.
I think anybody on the real scale feels the inflation still. These goods never get repriced downward, right? I mean, no matter what they say. And to Sammy's point, I think he's spot on. They will just sort of jigger the numbers and make them work to however they can to make it look like, oh, we're back down to 2%. But don't worry, it doesn't count gasoline or coffee or any of the things that are just going, bananas in terms of just the inflation. So I think at the end of the day that they're just going to continue to monkey with the numbers until they get to what they say, and then they'll use that as the excuse for, oh, here we go, we're going to cut rates.
Yeah, it does feel a little bit like that sometimes. One other thing I've noticed is, if the only thing that's deflating or getting under control is the size of the items that you're buying. It's like the price goes up, but my chocolate bar is losing a bite every few months. So the dairy milk chocolate I'm buying is not the size that it was a few months ago. That's something I've been noticing. Legendary, maybe put a bow on this topic for us. Should we be buying coffee here?
The beauty of shrinkflation. I don't know if you should be buying coffee, but I do know that CPIs tend to have a lot of flaws. A good friend of mine in university looked at the CPI method in Austria and what flaws there are to it. And for a long time, for example, I know with computers, what they did is that they looked at computing power and they said, okay, price has gone up by, say, 7%, but computing power has gone up by 30%. So hence, overall, the prices go down by 20% because you pay less money per computing power per gigahertz, whatever, which doesn't make any sense, because you need an up-to-date phone, you need an up-to-date MacBook or laptop if you want to use it, and you can't make that comparison. And there's a lot of flaws like that, and I believe that to be the case with many CPI methods. And obviously that allows for skewing numbers in whatever way might make sense, and to represent maybe an inflation rate that's a bit lower than you think. And then final point on that, one of the biggest issues is from the medical side of things, because often you have now new medicine that didn't exist previously that might even make some surgeries redundant, but that new medicine comes at a different price depending on the level of healthcare and the healthcare system that you have in place. And that is one of the things that basically no CPI factors in like correctly, and can either be massively cheaper for your personal healthcare cost, or it can make your life so much more expensive. And those redundancies aren't updated that often, neither in medicine nor in tech or other domains. And the CPI is like often very lagging in the way that it's constituted. And if you update it frequently, then it's not really comparable with last year's CPI. So that makes it a very difficult system to want to track inflation.
Okay. Very, very interesting points. Definitely wanted to talk about that. I guess on some level to think of through the implications, but also just gauge some of the accuracy of this stuff. I just to shout out someone in the comments, and this might be a clarification, I don't know perfectly. Fugio shared that the BLS, which is I think some statistic place in the States, shared they're not removing coffee from the consumer price index because of changes in the way items such as coffee are packaged. We sometimes discontinue specific package size categories. Look, I think the point to be made is like, look, we don't know any of these things for sure. And in the technicalities of how they kind of package up the data, I'm sure there are things to kind of analyze and get closer to, which we are unable to do right now. So appreciate that additional context. Probably deserves some further analysis from all of us to really get to the heart of it, though. We want to keep it moving. We've got 2 more headlines to touch on today. Let's get into the VanEck report, I think, where traditional investor managers, VanEck, had a very, very bullish report. I'm just going to set it up quickly. I want to hear people's thoughts. They said we've raised our 2030. I'm showing this on the screen for people watching in. We've raised our our 2030 ETH price target to $22,000, influenced by Ether ETF news, scaling progress, and our read of on-chain data. I've actually got the report here. I was having a little look at it earlier, and one of the key bits that I thought was interesting, there's a couple of key bits I wanted to pull out for you guys, but the first bit that I wanted to pull out was on why they believe Ether to be like a decent, interesting, useful, productive asset. Because as you've noticed on the timeline for the last multiple months now and weeks and days, there seems to be a big argument that Ether cannot be comprehended. It is too complicated. But digital gold, which is Bitcoin, is way easier to understand, therefore much better for everyone traditional to invest in. Ether is too complicated. Well, this is VanEck's interpretation of Ether, which I think shows a fairly nuanced perspective. They say the following: we believe ETH is a revolutionary asset with few parallels in the non-crypto financial world. ETH can be thought of as digital oil because it is consumed by engaging in activity on Ethereum. ETH can also be viewed as programmable money, as the financialization of ETH and other Ethereum assets can occur automatically without any intermediary or censorship on the Ethereum blockchain. Furthermore, we consider ETH a yield-bearing commodity because it can earn yield in ETH by being pledged non-custodially to validators who govern the Ethereum network. Finally, we believe ETH can be deemed an internet reserve currency, as it is the base asset that prices all activity and most digital assets within the $1 trillion Ethereum ecosystem and its 50 plus connecting blockchains. So 4 key kind of use cases identified by VanEck, not confused by any of them, I don't think. Digital oil, programmable money, yield-bearing commodity, internet reserve currency. Legendary, what is your thought on VanEck's interpretation? Is this fair? Is it reasonable? What's your thinking?
I think it's both very fair, very reasonable. And I think what it does, it zooms out from the way we typically like to look at things, right? We are like, oh, is ETH better than Solana? BNB fits Solana. Is BNB better than Sol, et cetera, et cetera. And one part that I really, really liked about the report is basically them looking at a metric that you typically look at in tech companies and look at the revenue per user and compare it to Web2 businesses. And if you look at the revenue per user, with ETH, you see $324 of revenue. Uber sits at 272. Instagram only sits at 25. Netflix sits at 142. And basically, we've been discussing on the show gas fees for a long time. We've been discussing how people complain about high gas fees, but everyone's still using the applications. Now, again, you have all those L2s, gas fees not really an issue anymore. But the point here is to say, if you are an investor and you look at a tech company, you look at Netflix, you look at the number of subscribers, you look at the monthly subscription, you see what the business is doing, then you see Netflix pumping up the subscription prices and subscribers complaining or even quitting, canceling, sharing with friends and family or whatever to drive costs down, using a VPN in India to get a cheaper subscription rate. And then you look at a business like ETH where the users generate more in fees than Instagram, generate more in fees than Netflix, than Uber even. And you actually see a very, very profitable business because people like ETH for putting the money to work, doing gaming, doing DeFi, doing gambling, doing whatever. It doesn't frankly matter. If you just look at the numbers, a perspective, and compare it to a Web2 business, you see that it's a highly profitable thing and hence highly interesting.
Yeah, I thought it was very interesting they were comparing to Web2 applications. Just an additional interesting comparison they made, I'm reading from the report here where they said the most appealing aspect of using Ethereum is its potential cost savings to businesses and users, whereas Apple and Google take around 30% of hosted application revenue. Ethereum currently extracts around 24%. We believe that Ethereum's take rate will drop to 5 to 10% over the next 18 months as activity shifts to less expensive layer 2. So it's not just kind of comparing with Web2 apps themselves, it's kind of comparing to the kind of, I don't know, the app layer or the app hosts, Apple and Google themselves, because they appreciate that stuff can get built on top. Got to throw to Bread here. You've got your hand raised. Welcome back to the show, my friend. You are bullish on ETH. We know that. Did you get a look at the report? What are your thoughts? What are your thoughts on VanEck's interpretation of ETH at this point?
Yeah, so thanks for having me back, guys. I've been gone for a few weeks, so it's trying to get spun back up in the ecosystem again. It's kind of tough with all the celebrity stuff. Anyways, yeah, so context for VanEck, they have been very bullish ETH for a very long time. Like, you can go back and listen to podcasts from them talking over a year ago where they've been doing this exact same thing. Like, they've continuously been on the forefront of like calling bull upside for Ethereum. So I highly recommend people, if this interests you, go back, listen to them, listen to the thesis. And this is why I formulated my opinion, not because like, which I do believe, I align very strongly with this, but it doesn't matter if I believe it. This is just a sign of how traditional analysts will view the systems, and this was always part of the bull case, right? Because they can put it into a spreadsheet and do the stuff you're talking about, and calling it a triple point asset, where it's it's a store of value plus a commodity plus it's yield bearing, productive, right? Like, that's kind of been a meme for a little while now. So that's nothing new, but that has always been the bull case for Ethereum. And because traditional finance can take this thing, put it into a spreadsheet, come up with an actual valuation, as opposed to it just being purely speculative, like, that's all confidence, right? That gives someone, like, if you put two things side by side, and this is why everyone chastises me for saying flipping is happening. I still think it's very much going to happen. The smart contract platform is going to flip Bitcoin at some point, because this can be done. They put it into a fucking spreadsheet. It's going to say, oh, well, look, this thing actually has a P&L. Oh, look, it actually has we can calculate a P&E ratio on this thing. And because they can do that stuff, whether or not you think it's justified, I think it's kind of a meme, but whether or not it's justified, they can do it. And that will give them the confidence to bid that thing, because it's not purely speculative, right? It's not purely just like, oh, I'm going to buy it because the next person's going to buy it for more. Like, that's been the entire thesis the whole time. But this is, they summarize it very nicely there.
Yeah, that's interesting to hear you kind of corroborate that as I was reading through it, because typically when they kind of produce these reports, I don't know how many people, well, I don't know how many people read stuff in general in this space all the time, but when the corporate people put out the reports, I don't know who actually reads it either. So as I was going through it, I was like, okay, this is actually really nicely written, to be fair to them. So
it's familiar. That's the thing, right? Like, when you can actually start calculating like quarterly reports for protocols, but do it daily, right? Do it automatically. And that's what a lot of like Ansari and a lot of these other analytics platforms, they want to make it so that you can take specific applications and generate quarterly reports on a whim, right? Any point in time. And because as a familiar thing for people in TradFi, like, that instills confidence, and confidence instills the ability to say like, oh, I can bid this thing because it's familiar.
Yeah, very, very interesting stuff. Glad we were able to kind of bring you that context and break that down. Did find that interesting to analyze. Thanks for your insights, Bread. Well, let's keep it moving. We've got one final headline to do, but before we will do that, we'll hit the Web3 Roundup from the snapshot, which as always is pinned up top to get you up to speed with everything else that's been happening in the space in the last 24 hours. So number one, we've got Stablecoin Protocol announcing $35 million Series A for institutions to mint US Treasury-backed stablecoins. Always interested in that. We've spoken a lot about how the stablecoin industry is just a ginormous opportunity at the moment, and it's all getting taken by a few people. We spoke about Athena just a couple of days ago and how they're the first crypto USD asset to $3 billion, or the fastest one in recent history. Number two, Blast announces all gold and points should be distributed by June the 25th. People are definitely trying to stack as much gold as they can at the moment. Next, Wasabi Protocol, Blast and Pepe sell out 10,000 NFTs on Blast at 0.69 ETH, and the floor is up 2x to 0.13 ETH. That is a good win for those involved. Finally, CryptoPunks continue slide towards 30 ETH sales, and there have been a few sales beneath 30 ETH. The floor is now just above. A bit more news from around the space. Stand With Crypto advocacy group exceeds 1 million signups. Brian Armstrong, CEO of Coinbase, was tweeting about that yesterday. MetaStreet announces luxury watch yield and borrowing on Base. Seen a flurry of kind of RWA companies coming to the market. Interesting to see MetaStreet, who are already on Blast, going over to Base for this one. Jim Cramer asked Gary Gensler if we should have a bonk ETF on CNBC. This is a hilarious clip. You've got to watch it if you haven't already. I spent a good few minutes without Googling anything to wonder to myself if this was really real. And apparently it was. Pretty crazy to see that kind of discussion going on on mainstream media to see if there should be a bonk ETF or not. But look, that's the roundup from the rest of the space. We've got one final headline to touch on before we close the show on the hour. We mentioned at the top of the show that Prime, the gaming token, it's got almost a $2 billion FTV at the moment, will be staking for Prompt. It will go live. So that staking has gone live already. It has $60 million already staked in it, and they had a variety of options for staking. I'll just break down some of those for you here. There was 3 options. You could stake for 21 days, which was a 1.05 multiplier, 1.05x multiplier. You could stake for 180 days for a 2.4x multiplier, or you could stake for 3 years, 1,095 days for an 85x multiplier. And lots of people were doing it. There were, I know Dingaling tweeted that he'd staked almost $1 million for 3 years. I think there were other very prominent people really trusting this team. This is definitely one of the favored gaming tokens at the moment from the whole of crypto Twitter. Wanted to come to Sammy straight away here. What are your thoughts on Prime? Do you have any specific thoughts on it? And also this kind of staking mechanic, locking these kind of tokens up for a while. What's your thinking here?
Yeah, I think to me, this strikes me as a bet on AI generally. And I think if you're bullish on AI being integrated into gaming, into pretty much everything that we do, then locking it up for 3 years probably isn't a bad play, especially with an 85x multiplier. It's like, it kind of seems like a no-brainer. As long as you have the liquidity that you can use to meet ends meet and do whatever you need to do in the meantime. But I mean, we see, like, for instance, Turbo got listed on the Binance Futures recently. You've got deep in operations that like Grass and some of the other ones being built on Solana layer 2s. You've got all this like narrative that's forming. And I think 2 to 3 year time horizon makes sense to lock something up for that period of time if you're bullish on what's happening. And I think there's a lot of stuff that's happening in that medium to long-term time frame that we kind of underestimate. And I think there's a lot that we overestimate in that probably 12-month time frame that can hit the market. I mean, ChatGPT came out in late 2022. It's had some iterations since, but we're now 18 months on, and it's not wildly different, but imagine 18 months from now, like that 3 year time horizon could be quite significant. So if you're bullish on that particular meta, or the AI being integrated into everything that we do, then like a 3 year time horizon to lock something up for an 85x multiplier probably isn't a half bad bet.
Yeah, fair enough. It's definitely one of the first ones that's kind of successfully integrated the AI. How would you describe it? The AI trend. It's kind of integrated it directly into its gaming narrative. Legendary, what's your thinking here on that AI component and just in general, the token coming to market, or this kind of switch between them having the Prime token? Now you've got to stake the Prime token in order to get the next one, this very long lockup. What's your thinking here?
Yeah, I think what we've seen with recent TGEs, if you look at Pixelmon designed the UI UX in a way where when you claim your airdrop, you actually stake it directly, and you have that friction built in. If you want to sell your tokens, you need to claim your airdrop, which again is staked, then unstake, then you can sell the tokens. Here you have a very aggressive multiplier to incentivize people to lock up the tokens for longer, which is a bit of and that I absolutely don't mean it in a negative way. It's a bit of an admission to say, look, we need more time. We're building this. This takes time. We want for you to believe in that in the long term. And if you do so, you have this very lucrative and very attractive multiple, that 85x multiplier on your staking return. We've also seen that the low float meta kind of has ended with it was not as attractive as it used to be, both with gaming tokens, but with other TGs in general. But you still want to control the supply in absence of having like token sinks at the start of your TGE. And that's highly challenging, right? If you think about the fact you have a very good environment to operate in market-wise, you want to launch your TGE now, you might need more time. You need maybe the funding, you want to profit off the narrative of the trend that is there. So you need to find ways and incentives to basically have people on a longer vesting schedule, on a longer staking. There's always going to be a public component. There's always going to be an airdrop. Putting people on an airdrop that vests over 3 years might not really look that attractive. That's basically a way to do it where you voluntarily lock your tokens for 3 years and get the multiplier. But from a tokenomics perspective, you achieve the same, you lock up tokens. And that's something that's like very, very challenging for founders. I've spoken to John because I see him on in the audience, a co-founder of PlayEmber, and John has the background in mobile gaming, has done like hyper casual games in Web 2, and that kind of connects to the VanEck discussion that we had before, where you have like a system where you know the rules where you operate in, you pay your 30% fees to Apple, you pay to Android, and you know those rules, you know how the system works. But here you have suddenly token holders who can sell, you have market makers, you have so much more complexity going on. And this is an interesting way by Prime to tackle that and to also say, look, we need more time. And if you have a shared long-term vision like us, then you should be rewarded. And it's done in a voluntary way. It's not done by forcing people to vest over 3 or 4 years.
Sure. I mean, that's definitely a reasonable point, the voluntary aspect. It does feel like a long time, though. We just want to close the show with Kusho's final take. He is a guaranteed Prime Giga Bull. Kusho, prove your bullishness. Are you locking it up for 3 years?
Yes, I am. GM. I am locking a bit of. I think I split my Prime into 3 parts.
Okay.
Locked up one for I think 365, the second one for 784, and then the last one for the full 1,800 or something days.
Wow.
I think the idea is with Wayfinder that they are building infrastructure that could work across the board, not just for gaming projects to use AI agents, but for other protocols as well.
Sure.
I mean, we've seen a demonstration of how it works so far, and it does look like something that will take a while to be integrated into like our everyday trading and our everyday crypto experiences. But I also think it will massively and significantly improve the UI UX experience for crypto in general. If you can just give in a prompt and have an AI agent that does all the blockchain and crypto related stuff on the back end for you, like it creates a wallet, does the transactions, all that stuff, and does that for you. And it's like Legendary said, with AI projects, it's probably going to take a while. Plus, there's research, there's the execution of some of these things, there's the actual building of some of these platforms. And it's just a long game in general. And I don't think there are enough long games in crypto. And this is just one example of that. So I think with this, it's like people have the chance to get exposure to a very, very long game. And we've even seen Dingaling do like 100,000 or 10,000 Prime for 3 years. And that's insane. Because it's like people finally recognize, and I think it's just a few people, in addition to the fact that the parallel ecosystem is more like a cult. It's just like those people recognize that these things take time. They've seen it over and over play out in the parallel ecosystem, with the TCG also taking time to build out into a very gorgeous game.
I think
we also have Colony building out into a very solid game that's also taking time. So it's like these things take time. And this is a long game that's finally coming to crypto, and people are like, yeah, let's play.
Yeah, I think that's all fair. Obviously, that's from a position of being ultra bullish. And I think a lot of people share your perspective. One point I would just like to make for the people who are listening in, and when people see people like Dingaling kind of deposit huge amounts into like different plays, I think the one additional piece of context that you have to appreciate is like the amount of working capital that some people are working with is just not comparable with the average us kind of humble crypto participants. And so what might signal, and I'm not saying this is not the case, right? He's obviously bullish to be putting $1 million into one particular thing, but it's not as bullish as what it would be for you as an individual to be putting $1 million into that thing. And I think sometimes we ascribe bullishness based on the number, when actually that might be a drop in the ocean for someone. And we've seen this on the investor side of things, when you see the same investors on the cap tables for every single deal that comes through, and you think, oh, they must be bullish, they must be bullish. And then you realize they're on 100 tables. They can't be bullish or as bullish on all of them. So there's just that additional piece of context that, like, you got to appreciate that people are playing at different levels sometimes, and you got to always assess the risk for yourself as an individual. And 3 years is an exceptionally long time in crypto. So appreciate the need for the team to kind of build in that additional time frame to give them some flexibility with the token unlocks. But look, guys, that is the end of the show. We've run a little bit over today. We appreciate you for joining. As always, thank you to my legendary co-host, Legendary, and Sammy. Thank you to our other contributors, Bread, Jack, Oxy, Tiro, Funky, and Kusho up on stage. And thank you to everyone else in the audience. Remember, we do this every single day, Monday to Friday, 7 a.m. Eastern Time, 12 p.m. BST. Every day of the week, we're live on X. We are live on YouTube too. We'll be back again with you tomorrow. We hope you are there too. Have a wonderful day. See you and have a great day. Bye-bye.